Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. Busy show today. We have the earnings from after the bell and before the open today. We have Jerome Powell's speech yesterday. We have this Deutsche Bank raid, this early morning raid in Germany at the headquarters of Deutsche Bank. A lot impacting these markets, and yet we're still feeling bullish this morning, and so is our guest today. He is Marc Chaikin. He would join us at 8:15. He's wearing his bull hat as well. So a lot to get to on our show. Before I throw it to Joel, today's show is sponsored by Wealth Venue, the autopilot investment platform for everyone. Wealth Venue will structure, trade, rebalance, and do everything to your portfolio so you don't have to worry about making the right investment decisions. To learn more, go to wealthvenue.com or click on the link in the chat as I'm posting it there. Now, Joel, what is the word in the S&Ps overnight here?
We're in the red by 9 1/4 handles. Went off the board yesterday at 41.50 after that rip-roaring rally. Pre-market high right there, 27.42. That's our bogey on the upside. Folks, our 8-day high is right up at 27.48.75. So almost got to some great resistance, stopped a little bit shy of that. On a pullback here, folks, we are below mid-range on the session. I'm looking for 27.22 area as a first potential buy area. That's your daily pivot. Dip and rip in crude down up 61 cents here at 50.90. Took all the stops out. People that were hanging in there at $50, they got stopped out. Ran it to 49.41, and red dog reversal maybe on this one. We'll see if it can stay in the $51 handle or get there. Gold up 230, 12.20, 12.23, 12.32.20. Silver in the red by 7 cents at 14.39. Bitcoin is down $40, but above 4,200. And folks, you're going to have to excuse me that I'm a little bit tired. I stayed out way too late on a school night. The Michigan basketball game did not get over until after midnight, but they ripped North Carolina, so it was well worth it. So little
Did
off
you go to the game?
I went to the game.
Nice.
I got season tickets.
Hardcore. Nice.
We're a basketball school. We are a basketball school. I got my M. It should say M basketball, but I even dragged Day into the game. So it did not start until 9:30. And
why such a late start?
TV.
Because
TV money.
Because my game, Dennis, because my game was on first. That's honestly why.
It's your fault, Spencer Israel. But Joel is tired.
The Maryland game was on first, and we did not win. So let's get to the market.
We got a little bit of a sell-off here and maybe some profit taking after yesterday. We got some nervousness overseas here with Deutsche Bank. Maybe we should just jump right into the Deutsche Bank.
Yeah, there was a raid this morning on the Deutsche Bank offices in Frankfurt on apparent money laundering allegations specific to two employees who they did not identify by anything more than their age. And this is laundering as it relates to the Panama Papers, which was, of course, that big leak a year or so ago, or maybe more at this point. So they are hitting the stock this morning. I am surprised it's not spreading, though, to other banks and other areas of the market.
I mean, it's tricky. It's only down 3% here, so it's not like it's a disaster. It's not a good headline. That being said, Deutsche Bank's had a rally with the overall market the last few days, so let's see what it does here at the lows if it gets down there to 920. Obviously, it's been trading overnight, so I'm not sure that is going to happen, but I don't think this is something they're going to jump in and say, whoa, we got major problems here and we're going to start selling all the banks, U.S., European banks. I don't see it happening. I think you've got still this mentality, especially after yesterday's wicked rally. I'll call it a wicked rally because, wow, They were just buying, anything they could get their hands on. This buy the dip, people will be looking to buy the dip. We got a little dip here this morning. I think the same thing's going to happen here again, where even if I look under the hood here right now, you're seeing some weakness overall, but really when you look at the tech stocks really were leading us, some of them yesterday. Nvidia is only down 50 cents. That's not a much move at all. Apple is actually trading in the green here still today, so completely shrugging it off. I mean, there's just, we've switched, and we've been talking about this for a week. If you listen to our show, at least I have, the mentality of the market has switched. It's went from sell the rip to buy the dip. That changed back on November the 20th when all those tech stocks washed out, all the Squares and the Nvidias. And basically since then, we meandered for a few days on the S&Ps, but you could see that the writing was on the wall. They wanted to buy this market, and they did it yesterday. And I think they still want to buy this market. So I'm not coming in here shorting stocks. I would actually be looking to buy the dip on whatever you can. And I don't think this dip's going to last long.
Well, first off, let's just cover Deutsche Bank here. Is trading in the red by 35 cents at 9.53. Well under the $10 level. We did spike down as low as 9.30, and now you got your recovery high right at this 9.50 area. I just want to talk about something we talked on the pre-market show about, and the banks rally yesterday. So we're going to raise interest rates, and we have a hawkish Fed, and the banks go down. The
banks go up on that.
Yeah, are supposed to go up, right? Well,
they're supposed to go down if we're hot, but they weren't hawkish. They actually, that's why they
turned dovish.
Yeah, they turned a bit dovish for sure. 100%. That's what spurred, it's made us take off. And very surprising, you're right, but I think it's just a rising tide lifts all ships, and they were looking to buy anything yesterday. So, maybe when the dust settles, they start thinking about it's like, yeah, hey, if we're not going to raise rates as much as we were, maybe this isn't good for banks. But you know what? They weren't responding in a rising rate interest rate environment, so maybe they'll respond better in a lowering or in a flat environment or a neutral environment, as obviously a Fed was saying. 2 o'clock we get Fed minutes. Is that correct, Spencer Israel?
Yeah.
So I think they've already tipped their hand though here. Obviously, we're getting a little more, even though they're not market dependent, meaning watching the markets. We know they somewhat are. So, they see in the sell-off that happened there, and they want to make sure, that they're not going to send us into a tailspin here. So those comments were exactly what the market and what the doctor ordered if you were a bull.
That's what I was trying to say about the banks there. It didn't come out right, but just for Bank America, which I've been keeping an eye on here, $28.50 level. You had a high rate at $28.52 back on the 12th. So that will be one stock I might be looking to try short position if we could get a little rally back on change. What I've noticed a lot with Bank America, like even though the SPOOs are down and it's down trading, a little bit less than 1%, if you get any kind of pop, it will go unchanged on the day. I mean, you have to be really quick, and you have to have your orders out there. But especially in the first few minutes, that you get some movement in that one. I'm
keeping my buy the dip hat on though. BTF.
That's
what I want for Christmas. I want a BTFD hat and an STFR hat. We won't see what the F stands for in either of those, but sell the rip, buy the dip. Right now, I have my buy the dip hat on. I had the sell the rip hat on for a long time in October, November, and now I still have my I've put the buy the dip hat on ever since November 20th, and I'm going to keep the buy the dip hat on. So you know what? That would just be the best way. I don't even have to talk then. I have to talk over anybody. This would be good for you to get this for me for Christmas, Joel, because then I'm not talking over you Christmas gifts. I just wear my hat and I just trade stocks. And you can just say, no, I don't even have to talk on the show, and then I could trade more too.
That would be nice.
I just have a hat on. You can look at me on the visual, as long as Spencer Israel shows us on the video, and we just see what hat on, and you know what I'm thinking. And if I trade, and you know what, and I might be flipping intraday sometimes too. I'm day trader, so I might take one off and put the other one on, depending on what's going on. So I need those two hats. That's what I need, and it will help me with this bad hair. Like get this, morning hair, and obviously I'm in the trade cave here half the time, so I'm not the prettiest.
Is that what you call it? Is that what you call it? The trade cave?
It's in style though, that crazy bad head, isn't it? I've been trying to put that bedhead in style for 25 years, and finally I think I won. But
how bullish are you? How bullish?
Well, I'm not chasing anything up here now. I mean, I'm hoping for a pullback, but I'm full on the bull train right now. So I think pullbacks to be bought. This morning's pullback after a 600-point rally, could we fall a little bit more? I would love us to fall a little bit more. I would add more stocks to my portfolio, but I'll tell you how bullish I am. And this isn't a good example here. So last night, guest reports, GES. Give us the numbers here, Spencer, and we'll talk about the trading action here. And I'm going to tell you I made a trade off this last night. I'll tell you how I was thinking it. I made some money on it. GES.
All right. Guess after the bell, Q3 EPS 13 cents, up a penny on a year-over-year basis. Sales 605 for $603 million. The Q4 EPS guidance was light, and the fiscal year EPS guidance was also light.
Nothing good really in this report. They knocked it down to where, Mr. Elconin?
Oh, they knocked it under $19 to $18.51.
Down to 18, is that right? 18.51 last night. So they killed this thing. You're talking a stock down like 12-13% last night. You know what happened an hour later?
Buy the dip.
They rallied it all the way back, and the thing is trading basically flat right now, down 30 cents. So here's a disaster quarter, really, for guests. I'll call it. You know, the media will try to find the tea leaves because the thing's not trading down, so I have to justify it somehow. But, you know, basically it's like disaster quarter. You know what? They just want to buy stocks. So they're like, well, whatever. We'll just buy it. So you know what I did last night? Abercrombie and Fitch was trading down last night in the 16 handle. After the guest report, after I already watched guests sell off 13% rally all the way back, Abercrombie and Fitch is trading like 1660, 1665, 60, down 50 cents last night ahead of the report. I'm like analyzing this and I'm like, okay, I just watched guests miss lower guidance, watch a stock fall 13% and come all the way back in an hour. I'm like, okay, so I'm analyzing like this. If Abercrombie and Fitch misses, well, they might knock it down a bit, but it might come back anyways. And if Abercrombie and Fitch beats, they're going to rally the hell out of this. So I'm like, I think heads I win, tails I win. They're giving me a 50-cent lead last night buying in the 16 handle. So I bought the stock in the 16 handle. I sold a little bit, came back up over 17. I wish I would have held it all. But that was last night, but I still held a pretty good chunk. And I was like, I was comfortable holding it through the report because I'm like, I think heads I win, tails I win. I mean, even if it was to sell off, I just watched guess rally all the way back. So the market kind of tipped me off. And here I'm getting rewarded this morning. I've already sold my Abercrombie and Fitch, sold a little bit early in the upper 19s. But I mean, I'm talking about making like 18-19% here because I bought in the 16 handle last night. So that's just an overnight trade. And just reading from the guest report, bought Abercrombie last night, and I got paid for that analysis last night.
I can guarantee you that is something I did not teach Dennis. That is something that analysis is pure Dennis arbitrage.
It's a sympathy, like watching what, you know, a very close peer did. And I'm like, they didn't kill gas on the report. Abercrombie's sitting near the lows. So it has that going for it, where they're wanting to buy stocks that are down. And I mean, am I wrong to analyze it like that last night? I'm thinking, like, who's selling this thing down in the 16 handle after we just watched what guest did? So I'm like, I'll buy it. And you could have bought it all morning. It was like at 7 o'clock when I came in this morning. I was offered at 1690. So and then they came out and boom, blast off.
Just another good point, and then Spencer will let you give the numbers. People were feeling good yesterday. 600-point rally. You know, we talk about reporting on the right day and the wrong day. After the close yesterday was a good day to report. Everyone's feeling good. The market's up. We're going back to new all-time highs. And Dennis, Spencer, I'll let you come in 1 second. Dennis, do you think we're going to make new all-time highs by the end of the year?
I texted you that just for fun. I don't know if that's the case. It's an overhead supply up there, so I'd say no. I would say no, but I would say it's not impossible.
No,
it's not impossible here. We come back. So let's look from the lows here, 260, 275. I mean, we're almost halfway back in 5 days, really. So the low is in. I mean, I've said it. I'm the only one that was saying. I mean, on Fast Money, I was even arguing with, I think it was Steve Grasso, was on CNBC on like the 22nd or 23rd, saying we haven't had that washout yet. That was his commentary on Fast Money. We haven't had that washout yet. And I tweeted at him and I said, what was the 20th? when Square was down 12, 13%, when Nvidia was down 10% more in the pre-market, when Boeing was down 20 points and the S&Ps were only down 1%, that was a washout. Didn't respond because I guess I'm not cool enough for him to respond to. But I mean, I gave a pretty good argument to him there when he was, when he was talking fast money. I was trying to respond back. Maybe he gets lots of tweets and doesn't read them all, but he's responded to me before. So I think, he probably did see the tweet. But I think that was a washout. I think Grasso was wrong.
Right,
I think we did have it. I think we did have the washout. Maybe we didn't have it in overall market, but we had it in a lot of individual stocks that morning.
Do you want to?
Yeah.
I called it. I'm patting myself on the back here.
You are.
Good job, Dennis. Good job.
Live on the show. I said, I think this is it. I think this is the washout, and it was.
So
and,
obviously
going to do those 2020, but
right,
all that ahead of time.
I'll give the Abercrombie number real fast, and then I'll bring in Marc Chaikin. So those Abercrombie numbers did come up heads for Dennis, so he won 33.
It came up tails. I was going to win on that too.
Yes.
You take those bets. When you got heads, I win. Tails, I win. I bet.
All right, 33 cents.
That was the bet last.
20 trading into highs in the pre-market session 2055. If you're looking for a little bit more of a rally, 2091 was your October 31st high.
Hey, Marc, how's it going? You are live on Benzinga's PreMarket Prep. What's up?
The market's turned around. Everybody's got a little bit of a smile on their face this morning.
Yeah, Marc.
I've had the buy the dip hat on for a week here now, Marc. I wish I was saying maybe Marc will get me that for Christmas, but I was saying to Joel, I'm like, you just got to get me a hat here. I'm going to have my buy the dip hat on and sell the rip hat on, and I'll alternate as I go because I'm a short-term trader. But the buy the dip hat on is firmly on here. I'm going to keep it on right now, even though the rally yesterday was a little bit maybe overdone, but I'm still keeping my buy the dip hat on here. I think the market, the sentiment towards this market has completely turned here now. I want to know what the Chaikin indicators are saying, though. Chaikin money flow. What's going on here, Marc? What are you seeing?
Well, when we came down on the Friday after Thanksgiving to test the 2,600 lows from October, the Chaikin money flow was positive on both the SPY and, more importantly, the RSP, the equal weighted S&P. And that is typically a great short-term buy signal. More importantly, the low that we made a week ago Friday came within our volatility bands. The first set of lows came outside the volatility band in October. This is sort of a similar pattern to what we saw in February, March this year. So it looked to all eyes like the market was primed to rally, but it required a catalyst, and I think Jerome Powell was the catalyst yesterday. Remember, his comments in an interview is what really triggered the waterfall decline, that interest rates weren't anywhere close to their normal number, and suddenly he reversed course on that.
Do you think that they say that they, are looking at data, but I think a lot of people realize they're looking at the markets here too. And when they see the market getting killed in October, and then, obviously we had a big sell-off at the beginning of November into the middle of November as well, and we're kind of meandering here, and he knows he can take it either way. Don't you think they talk a little bit just to not spook the market?
I actually think they don't. I'm having.
You think they just use data like they say?
Well, yeah, I do, and I'm going to give you the one data point that.
Okay.
I'll credit Jeremy Siegel with this. PCE is their favorite measure, personal consumption expenditures of inflation. With oil prices dropping like a stone, gasoline at the pump is way down. That's like a tax cut for individuals.
Good point.
But it also means inflation is below. If PCE drops below 2%, and Jeremy thinks it will, then the Fed has very little justification to keep the brakes on. So yeah, they were concerned. You know what they're doing here. They're unwinding the balance sheet. So that in itself is tightening. But they're trying to get interest rates up to a level so that when and if we do go into a recession, let's say it's 2020 or 2021, that they then have the leeway to start cutting rates. You can't cut rates from zero. So they had to do this. But I think they've reached a level here. We could get to 4% on the 10-year Treasury, and I don't think that would derail the stock market or the economy. But That was the fear. The market was gripped by fear. I love this CNN fear. Some pretty warlike things about tariffs this morning and some tweets. The market's actually not getting killed based on that, but depending on what happens in the G20 and the China talks, the market could come back down again. Right now, I think a W bottom's in place, but no, I'm having a former Fed chair at my house for dinner on Saturday night here in Philadelphia. He lived down the street from me, and we've become good friends. And he has told me over and over again that they don't look at markets. Now, he's been out for about 2 years, but he's pretty in touch with what's going on. If they think that they've contributed to the panic, there's a little more sensitivity. But no, they are data driven.
It's a great point, and I didn't consider that on the oil tax cut, because it's right. You see at the pumps there, when oil falls 30% in a month and a half, there's definitely a consideration there as well. So great point.
All right, Marc.
And below $50 a barrel this morning for the first time.
Psychological there too.
Yep.
Okay, so Marc, tell us, give us some idea of where you're looking this morning. I guess on the long side, since we're all bullish here apparently. What sectors do you have your eye on today?
Okay, but with a caveat, don't chase the rally, because there's going to be some sort of pause unless Trump comes in with a curveball agreement with the Chinese on tariffs, in which case we blow right out to new highs. I like healthcare, which has been the leader, but the really good names, WBA, Walgreen Boots, looks like $1 million. It's broken out above a double top. CVS, still bullish in our work. I like Walgreen better. UNH and Amgen, again, only on dips. So the healthcare complex, I think, is attractive. And it's not just a defensive play. That's the beauty of it. There's growth potential in there. So it's both a defensive sector and a growth potential. In consumer discretionary, love Comcast and Viacom as a turnaround situation. And I think that, consumer discretionary is a very mixed bag, where home builders still look awful, retailers look awful. So you've got to be very selective. And then when you look at FANG stocks, bearish and remain so on Netflix, sell any significant rallies. Same thing with Facebook. We have bearish power gauge ratings on Apple, NVIDIA, and Amazon. I think you got to be very careful there. The only FANG stocks that I would be buying here are Google, because their franchise is just extraordinary in terms of advertising and search, and then all the other investments they've made in Waymo self-driving, and Microsoft. I think Microsoft can be bought on weakness. So I think it's now a stock picker's market, which is always the case in a period of rising interest rates. We've lost sight of that recently because we've had these waves of selling in October that took everything down. Now we've had waves of buying here over the last 3 days that take everything up. Here's one name I'll throw out. Let's talk about it. Berkshire Hathaway. It's a great way to play the American economy. And they've now taken some stakes in the major banks, which don't trade well, but Berkshire does trade well. You get Burlington Northern, you get their insurance business, and you get big investment now in the banks. So interesting stock, bullish power gauge rating, moving up nicely closer to its high than not. And that's an interesting name if you want broad participation in the U.S. economy and the financial sector.
Well, what about the rest of the financials here? We have this Deutsche Bank news this morning. We've seen in the past 2 years, Deutsche Bank has had their share of negative headlines. We've seen it impact the sector as a whole on that day, not really doing so much this morning. Well, what about the financials here?
Well, the investment banks I would stay away from. So Morgan Stanley, Goldman Sachs, Raymond James, even though we like Raymond James 6 months ago, I'd stay away. If you look purely at the technicals, JP Morgan, Citi, they're just not trading well. Where there is opportunity is in the insurance stocks. That's the one part of the financial sector that really looks well. So Berkshire is part of that. Chubb, CB, looks like $1 million. I would take a look at Chubb. But I'm puzzled by the banks, and you hear contrary opinions. Rising rates are good for the banks. No, falling rates are good. So these stocks are sort of locked in a trading range with a downward bias, and I don't think that's where you put your money. Again, if you want to participate, Berkshire gives you broader coverage with some participation in the financial major banks.
You mentioned some big tech names. Question now from the chat. Your thoughts on Qualcomm?
Well, Qualcomm had an interesting, sort of take on 5G here. We have a bearish rating. It hasn't participated in the rally to speak of. Yeah, it was up 1.9% yesterday when most tech stocks were up close to 4%. Don't like it. Don't like it. I wouldn't sell it just here. I'd wait for a rally, probably closer to 58, which may or may not happen, but don't like Qualcomm.
All right. Do we have any other questions for Mark in the chat? Not seeing any right now. Mark, ahead of we got the G20 summit this weekend. How do you see that shaking out in the market?
Well, I think there's probably going to be a little bit of a pause today and tomorrow because so much could go wrong there in terms of the discussions with China, and that's a big catalyst. So the risk, if you're a short-term trader, of being out is as high as the risk of being in, because if something positive happens, you're not going to be able to get on that moving train. So this is a pretty dicey time. I think for investors, if you bought the dips, you stay, start pruning some of these weaker names we talked about, like Netflix and Facebook and Nvidia on rallies. But hard to know what's going to come out of a big meeting like that. If you parse President Trump's tweets this morning, he's saying more to go. We're going to stay tough. So that could be his negotiating ploy. Really don't know.
Marc Chaikin of Chaikin Analytics joining us here. Marc, I just want to talk to you about the potential for a Santa Claus rally and also the year-end effect. I mean, it's been a little bit of a volatile year. We have come back to make all-time new highs on a few different occasions here. But, just think about some of the year-end tax selling. I think people are going to be looking at a lot of pressure on GE, a lot of volatility, maybe not quite of the returns as some people wanted. What do you think? Is that going to, maybe some year-end tax selling, portfolio rearranging? Do you think that's going to dampen the effect of the Santa Claus rally?
I don't. I think that enough people have suffered losses, and where you may see the selling is not in the strong stocks, but in the weak stocks where people still have profits, but they're way down. So, if you're long Nvidia for a significant period of time, even though it's down, it may be a rally and you sell into it. But I think a bigger point is being lost here. We had huge earnings gains in 2018. The market's gone nowhere. The market's basically flat for the year. Why? Because PE ratios came down. That's happened before. And the last time was 2011. The key point is, in the years following an environment like that, as long as you're not in a recession, we're not, you really do well. So I was thinking we'd get up to 3,000 by year end 18, in the summer, when we were talking about what might happen over the second half of the year. I now think that we've pushed those gains out into 2019. So I actually think 19, we're going to see PE ratios go up a bit, and we still have the prospect of 8 to 9% year-over-year earnings gains in the S&P 500 stocks. So I think we'll get a bit of a rally into year-end. Here's a key benchmark, 2815 on the S&P. If we were to break above 2815, that would complete a reverse head and shoulders pattern. 2600 was the low. If that proves to be the low, that counts up to 3025 if we break through that on a closing basis. So that's a key number. It's going to be harder to do that until obviously after the G20 and the tariff situation is resolved. But if we were to close above 2815, extraordinarily bullish, doesn't mean straight up to 3,000, but you get there pretty quickly typically.
Question on a couple industrials here from the chat, Mark. Deere and Caterpillar.
You know, U.S. dollar is very strong. That never helps Caterpillar. Deere is actually had a bearish rating. It's trading pretty range bound between 160 and 130. You're getting up closer to the upper end of the range, so I wouldn't chase it here. Caterpillar is seriously hurt by the U.S. dollar, and it's reflecting that in terms of the way it's trading. So I wouldn't chase the strength there either. It was up 5% yesterday, closed around 131. You get this up into the high 130s, and I think I'd be a seller.
And then one more here. Let's look at Palo Alto Networks, PANW. Thoughts on that?
Looking awful. Bearish power gauge rating, underperforming the market. Institutions are selling. Earnings are due out after the close tonight. You know, maybe they surprise to the upside and you get a short covering rally, but the institutions continue to sell the stock. Even yesterday, you know, this was a bit of a short covering rally, and it didn't even get above its 21-day exponential average. That's where it stopped the last time. Now, again, caveat, earnings are due out, but you're in a weak industry group. The trend is weak. Power gauge rating is bearish. If you went into the stock here, it would be a crapshoot.
All right. We've been on the line with Marc Chaikin. He's the founder of Chaikin Analytics. Marc, as always, thanks so much for the time, and we'll speak to you in a couple weeks.
That'd be great. Enjoy, guys. Let's hope this rally continues after a small pullback.
All righty. 8:32, Joel, any update for us on the S&Ps here?
We had jobless claims.
Oh.
Joel's on mute, so
Yeah,
because
jobless
he
claims.
always does that once a show. Jobless claims came out here. I don't know if you have those numbers in front of you, Spencer. They just scrolled by on me, and I'm too lazy to go scroll back.
I do have them. 234,000 versus 221,000 estimate. That was for initial jobless claims. Continuing claims 1.7 versus 1.66 million. So a little higher on both, but doesn't really move the market though.
Joel, what were you saying there on your muted activity?
And you know what? I was going to do a lunch bet that I wasn't going to do that today. And
I could have got another lunch from you.
I would have lost that. What I was going to say about the SPOOs was we got an interesting level. And yesterday we talked about 50% retracements, and we tried to use it a little bit longer term. But in a morning like this, when I'm, trying to, pick a direction for the market, you've had a good range. Mid range is 35.5, 27, 35.5. And we are just dancing above and below that. So you get a close above that. I look for, a test of the 2740 area, but we're just really meandering on both sides. I want to just mention crude real quick because I haven't been playing this on the short side, which is kind of unusual for me since I love to, get short things as opposed to going long. But been looking for a place to buy, and this $50 level, they gave you a couple lows there at 50, 15. Actually, you had 4 daily lows there. Well, they flushed out everyone that was leading on that level this morning, and they took it down to 49.41. And you got a nice rebound. There was some news. So now there's enough there for me to lean on that 49.41 low for a possible swing trade here. Coming back on the upside, if I'm waiting to buy this on strength, I'm waiting until it clears 52.50. You got a trio of highs for 52.25 to 52.56. So maybe they just flushed all those people that were leaning on 50, and now you get a rebound. But trying to pick bottom is it's been very tough in this crude oil market.
I've been beat up on it hard in my portfolio. Not that I was overweight crude, but I was probably equal weight coming in. All year I've been that. I've had some energy funds, and my energy funds were doing fantastic up till the beginning of October, and then they just cratered and got destroyed. And I mean, crudes went from $75 down to 50 in a month and a half. So it's going to drag every crude stock down with it. Obviously, I'm in Canadian, and I invest in Canadian funds, and they're just heavy energy weighted. So a lot of those energy funds, then I had some direct energy funds too, and those were wrong. Those were bad moves, obviously, because it's down significantly here. So, in any types of rally here now, you're going to have sellers mean. So crude is still ugly. I think, you're going to get a bounce here eventually. It's going to be some short squeezing. The thing, has been annihilated really when you analyze in the last month and a half. I mean, when have we had a 30% sell-off in crude in 6-7 weeks? It's been a long time they had to sell out that steep.
The only comment that Marc made that I'm just gonna have to do some more digging in. He talked about this incidental tax cut from crude declining, but it wasn't up there that long, and I think it takes some time for things to filter from higher crude oil prices to higher gases at the pump. There's always a little bit of a cycle.
Yeah.
And I just don't know if it was up there at 75, $80 long enough. I mean, I know when I filled up my tank, you take notice, but I just don't know if it was up there long enough for it to have a negative effect on people's pocketbook. And now the quick decline, I just think it might just kind of come out as a wash on that. But that's just a few comments here on crude oil. Spencer, you want to get back to some earnings?
Well, I'd actually like to take just control for a second here.
Sure.
We got to talk to TLT. We are up significantly here on the TLT
Sure.
this morning. It's a big move for it. It's almost 1% up. I'm not sure if that just took off after jobless claims, but it was just lighting up on my screen here, so probably getting more active after jobless claims at least. But holy cow, I mean, that is a big move here for TLT. That's obviously good for utility stocks, good for your defensive names usually. Usually bad for your banks. Not surprising, your banks are taking it on the chin here this morning. Bank of America now trading down almost 1%. It's going to be a tricky one, though, because you had such a wicked rally yesterday. You've got a few people caught short, so there'll be buyers on the pullback. Other things being equal, if we just had neutral markets coming in and it wasn't already choppy coming in, I would say it's going to be a bad bet day for the banks. But I'd be cautious with the shorts down here on the banks just because they had a pretty good day yesterday, and they're starting to look like, they want to turn a bit. So, and, we did get obviously dovish comments, which we already commented on from Powell there yesterday, and the banks responded actually well to that. So, despite the TLT being up here and the banks are down, and I think they're going to be down, I don't know if it's going to be continued weakness. I don't know if it's going to be as bad as, a normal day when the TLT is up $1.
Did anyone see the action in Micron yesterday? Pretty interesting around the close. A little later in the afternoon, they gave guidance. Their CEOs.
Yeah, you know what? And I actually was trading this a bit on this. And initially, I was like, oh, I got to short that, because the guidance looks light. And it didn't sell off. And you want to know something? When stocks stop going down on bad news, it's telling you that there's just underneath demand. And the stock is dirt cheap. I am owned in my invest portfolio. It's been wrong. I sold half of it at 43 because I was admitting I was wrong. Kept half of it. Wish I would have sold the whole thing, obviously. But it's on its comeback. You know what? I look at this now. I look at Applied Materials. You can throw all these in the same boat. Applied Materials looks like it's ready to break out. I'm almost even on my AMAT. I bought on the way down back in early October. Obviously, it was too early. It's come back almost to I think I'm in the 37 handle. Lam Research blasted off yesterday, LRCX. Intel is doing its own thing, but it's come back quite a ways too. The chips, are looking better, and Micron has been one of the worst performers here. But despite not great guidance, and people will come out and try to find, why it's not trading down. It's not trading down much on this. So let's see if it can respond and actually go positive on this bad news. That's a good sign for both.
Well, the guidance he gave, he said their EPS would be toward the higher end of the previously issued range, and the sales would be towards the lower end of the previously issued range. So I don't know what that means. Honestly, we just got a comment here from Raymond James. He said that he believes that the trends are moving directionally lower, and potentially another downward revision in the near term with regards to their earnings on December 18th. But yeah, I don't even know what to make of those comments yesterday. But it just interesting chart, the way it popped, gave it back, and then popped again.
Yeah.
So, I don't know.
And it was interesting action because if they gave that headline a few weeks ago, they would have knocked the hell out of this thing, and they did. I mean, when they reported, when did they report earnings, Spencer? I remember it getting knocked down, and then it came back though that day.
Yeah,
What
December 18th.
Yeah, so
Yeah.
December 18th.
Well, I'm sorry. Well, that can't be right. Is that right?
Maybe they haven't reported for 2 months. It's been that long.
Let me confirm that.
Didn't they
that's
say
right.
something a
That's
little while
right.
ago?
December 18th is when they're reporting.
Okay, so they're due to report still. There was something though. There was some bad news with Micron. Either somebody downgraded or something happened, and it was Applied Materials too. Same thing. Remember, Applied Materials reported, and it was trading down significantly, like over 10%, like to $32 that day it reported, and it closed positive. And so you're starting to see good responses to these chip stocks on bad news. Now, throw AMD and NVIDIA out the window on those because those were obviously outperformers for a long time. They're not anymore, but they were for a long time. But, the Applied Materials and the LRCX, Lam Research, Micron, all of those chip stocks have been, just beat up. And on the last earnings report on AMAT, it was trading down over 10% on its earnings, and it closed up that day. So those are tells. Those are tells that it's about to turn. And then, you want to maybe get on, be buying pullbacks. Again, I don't like chasing stocks. So remember too, when you see something just ripped off, and, like yesterday in the overall market taking off 600 points. If I'm bullish, I'm buying dips. If I'm bearish, I'm selling rips. I'm never buying rips. And if you're buying yesterday when the Dow's up 600, you're buying a rip, and you're getting punished for a little bit here this morning as we're pulling back a bit. But, always keep that as a trader. I always keep that in my mind. I'm buying dips if I'm bullish, and day trades are going to be bullish, bearish. You're going to be all over the place here. But if I like the stock, I want to be long it. I'm looking for a dip to buy. If I like, the trend or whatever, I think and it's really weak, I'm going to be looking for a rip to sell. So I always keep that mentality. I'm buying dips on strong stocks and selling rips on weak stocks.
All right.
Not chasing.
I
went on wild tangent.
No, it's okay.
I know. I can't even keep track of them.
It started with Micron.
Yeah, we started.
And it went into Applied Materials, and I went on my
LRCX.
But what I'm trying to say here is, when you got stocks on bad, I think the Micron is starting to turn. So I'm looking for dips to buy and something like that.
I just don't understand. I don't understand the whole chip in. I really don't. I don't know if it's my age or whatever, and the DRAM and the SRAM and all this stuff. And all I know is I tried to play Micron when they just sat. This must have been in 16 and 17, where it just kind of sat around $15, and I was trying to play it then. Missed out. I knew when it got over 60 and everyone was like, woohoo, we're going to $100. I knew that was a bad sign, but
I wish you would have told me, because I was
I did.
I thought it might have went to $100, and I nibbled. Remember, I put like one small investment up that I bought some at 60, I bought some more at 50, I bought some more at 45, and then I washed out on half of them at 43. I've been dead wrong in Micron, guys, so maybe you should not listen to me in Micron.
I know.
I've been wrong.
Yep. Let's catch up on the chat here. DC wants thoughts on Mr. Softy. Is it still your most valuable company? Apple had a big rally yesterday.
I'm moving Microsoft yesterday. Microsoft's in striking distance of all-time highs, guys. That's incredible. It's incredible. 116. It's 5 points off its all-time high after this whole tech wreck. Some tech stocks are 30% off the highs. Microsoft's like 4% off its all-time high. That's absolutely incredible.
And after the bell yesterday, they raised their quarterly dividend to 46 cents a share. So just keep on going.
Yeah,
right.
It was a big move there too. So and maybe the raise wasn't significant, so it's not really responding to that. But I mean, it was a big day for yesterday. Apple had a good day yesterday too. I mean, everything had a pretty good day yesterday.
What about, let's talk Dollar Tree. Let's get back to a little bit earnings here. Dollar Tree trading in the red. What do you do, Spencer?
Q3 EPS $1.18 versus $1.14 estimate. Sales 5.54 versus 5.55 billion. So slight beat on the EPS, slight miss on the sales. The Q4 EPS guidance was light. The Q4 sales guidance was light. The fiscal year EPS guidance was cut. They lowered their that was their sales guidance. Their sales guidance was cut, and their EPS guidance was cut, actually. So fiscal year guidance cut, Q4 guidance lower, and that'll counteract any Q3 numbers that they reported.
I mean, you can't cut guidance. So we know that when you cut guidance, typically, unless you guess, with GES yesterday. But even when you cut the guidance, GES was down 12%. So they're going to hit you when you cut the guidance. So I would say if I'm the Dollar Tree, you're going to challenge. It looks like the low of the move 78.78. That's the low of the move 79.40. Let's see what it does there. Can it hold there? But we've had some absolutely wicked moves in this stock before.
It is a wicked one. I know.
It's a wicked stock. So if you think, oh, a 5-point move is like a pretty big move and I can safely come in here and buy it, something, it could be at 70 in your face. So just be very careful if you're trading this. I'm not even going to try to trade this one.
I never
It's
do.
just too wicked on earnings. I usually sit Dollar Tree out on earnings because it's a wicked stock.
They took it down. Yeah, they took it down to 75.43. Rebounded it back to 81. So those are your earlier parameters. I'd still be keeping an eye on this big, ugly red candle, and you had a 78 low. So I think if it, we're only 70, 80 cents away from that, you take that out. That's a new low of the move. That's a replay for me. I don't need to see that again. Also, I don't understand these, chip stocks. I really don't understand these dollar stores either. So not an area that I've
too many dollar stores.
Yeah.
Too many of the things. They're, and I know Kramer's always pumping $5 below, but $5 store. Then you got the dollar store. They come out with a $10 store here eventually, and then probably come out with remember the 99-cent store that was there forever too, but trying to penny. They were the ones they must look at the penny jumping algos with 99 cent. Whatever happened? That went off the board, eh? 99 cent. Remember the 99-cent store?
I can't remember.
It was like NDN, the ticker. I used to trade all the time. I can't remember. I think it was NDN, but anyways, 99 cents. There's all these dollars. There's too many of these dollar stores. But, that's besides the point. Obviously, people like them. I don't mind them either. You go in there. I like the Dollarama in Canada. It's like stuff's $1, $2, $3, or $4. But there's pretty good stuff in there. Get stuff cheap. So they're busy, but there's a lot of these stores.
Yeah, I know. That's where you go to do.
It was NDN.
Christmas shopping. Good question here from Risk Slayer. And Dennis, I'll let you handle it. You're talking about buying on dips. And Risk Slayer is asking, what do you look at to buy on dips intraday? And I know what your response is going to be.
This applies, that buying strong stocks on dips and selling weak stocks on rips applies to all time frames, all of them. So if I'm day trading and the intraday trend is down, I'm typically looking for, I'm getting filled on stocks as I'm talking, I'm typically looking for a rip to sell. So I'm looking for, not necessarily a rip, but a counter trend move. And it goes right back into the fibs, the 50% retracement. If you get a stock that falls a buck, suddenly, often we'll retrace up 50 cents. That's the sell point. Not chasing it down the buck, but wait for it, to come back up to 50% and then you strike. Maybe you see a little bit of a turn, maybe you see it a little get heavier, then you strike. So I use that 50% in all time frames, the 50% retracement, talking about the fib, the only one I use. And I'm, always looking counter trends. So rarely are you seeing a stock fall 2 points and then rally all the way back 2 points. It does happen. I mean, Guess did it last night after hours, but, probably lighter volume too. But intraday, I'm looking, if the trend is down or if the stock's been trending down, you get a counter trend move. That's when I'm looking to strike, is above at the 50% mark. So typically a stock falls $5, rallies 2.5. That's where I'm looking to short it. Stock rallies $5, comes off 2.5, that's where I'm looking to buy it. So they're looking at that 50%, and that totally, just works with the buying stocks that are in uptrends, selling stocks that are in downtrends, but selling them on strength and buying them on weakness.
All right, good explanation there. A long time ago, we started talking about Microsoft, and I'll just keep an eye on 112.13. That's your all-time closing high. You didn't quite get there yesterday. Your all-time high is at 113.08. Let's talk about
this market. We have come all the way. We're coming back here slowly here, Joel. I mean, the Qs are now only down 60 cents. We were down when we started the show. We've almost got half the losses back from when we started the show. So again, the buy the dip mentality is starting to come in here. So Deutsche Bank not spooking the overall market. This market is starting to show a lot of signs of life. I'm just looking under the hood here. Boeing's trading higher. Boeing had a huge day yesterday. Apple is now fully in the green, not even a little bit in the green. It's all bucks.
I know. I'm so upset with Apple.
There is some.
Oh my God! You talk about a penny wise and a pound foolish. For the
I love this thing.
Oh my God. I'm talking, I want to add Apple to my long-term portfolio. I haven't been in it in a long time. And it gapped up yesterday. And I'm thinking, oh, it's going to come in and fill the gap. So I think I had an order at 174.60 or 174.50. I'm like, oh yeah, come to pop up. And you know what? The low is 174.93 and misfilling the gap by 16 cents. I guess I'm not the only one that had an idea. And it's something I usually don't change orders on, things like that, because I always get, you always get hit. And then I came back, I saw this thing at 180. And Dennis, you were talking about that yesterday when we talked about the 50% retracement yesterday. And we said 170.26. That could be the low of the move. So at the time, if you were looking at a swing trade and you're risking $6-7, which just would have been the right move, boom, that 50% retracement now trading at 182.56. With the spoos in the red, I mean, $18. I mean, I don't know. That could be a prediction here. Apple $200 by year end.
We set up a trade on this 2 days ago. I didn't do it, but we set it up when Apple's trading down on that news. So we had the 170.26, and you rewind the show to the 27th, and we set it up, and it was trading 171. I was like, if you want to get long, you got your stop out. You had your stop out at 170.26. You could have bought it literally like 50 cents, 60 cents above that stop price. Say even $1 above that. Risk yourself $1. You'd be up 11 points right now in that trade. So it's those low risk situations where, okay, you had some bad news. The market turned, it gave you a nice spike, and now it's pulling back here on some more news or some, other headline there. But sometimes those lows don't get breached. And you know what? I think Jeremy Newsom from Real Life Trading does a really good job at this kind of stuff. We've had Jeremy on the show a lot of times. And I'll tell you, out of everybody we get on this show here, Jeremy is one of the guys that I was like, he's almost like he's very good with swing trading. And I feel like I'm very good with day trading. I feel like I'm not that great at investing. I need to probably, I do okay at investing. I think I do, I don't know if I've never really analyzed it enough probably to know, because I'm always, just long. So I make money as the market goes up. I feel like I'm an excellent day trader. I feel like I'm an okay swing trader. I feel like Jeremy is an excellent swing trader. So it's something that, that's a person that I learn stuff from just by even following him on Twitter and setting different things up. So, he, and not that he had this set up there, but he knows how to put those risk reward ratios into perspective. He always sets it up. The guy has so much accountability because, he comes on, he'll say, at the end of the day, how much, or he's got in risk units he uses. And, and at the end of the month, he just always seems to make money on these swing trades. And, here you are, last month, and a lot of swing traders are not doing well at all in the last month and a half because the market's been so weak. But Jeremy sets it up and he finds the ways. So I'm props to Jeremy if he's listening, and I know he listens to the show sometimes. But all I'm trying to say is, if you're a swing trader, set yourself up. When you enter these trades, know where your stop out is. Put that stop in there. And on Apple, you could have bought the thing 171, 172 stop. Say I'm going to stop out if it makes a new low on the move. It did not. It reversed, and you're getting handsomely rewarded for that.
We got a special treat for our listening audience next Friday. You know how I always talk about Nashville and country music and how Lisa wants to go down there? Well, Lisa and I are making a trip down to Nashville. I'm going down Thursday night, and I'm going to be doing the show Friday live from Jeremy Newsom's studio.
Nice.
Yeah. So we'll be a little crowded. We'll have the four of us on, but Jeremy, if you guys get a chance, and Dennis, I dropped it in your Skype chat. He was talking about stops, and Spencer, maybe I'll give it to you. Maybe we'll play out. And he has his stop out dance, and he says, because you know what, you have winning trades, you got to celebrate, but when you have a loser, you got to celebrate too.
Nice.
We got to. You know what? You talk for a second here. Let me send it to Spencer because I want him. Yeah, Spencer, I'm going to give this to
Play
you.
that stuff, because you know what? I've never heard about that celebrating losers. I've been trading and I get losers all the time. I still get mad when I get losers. I need to be able to take my losers better. That's why I always talk to you guys on the show, because misery likes company. When I have a really bad trading day, I like to complain about it a lot on the show because, the misery likes company. But I need to, and even in my mentality, I still, when I get it wrong, I'm kind of like just ticked off at myself. And, that's unbelievable to be able to, celebrate your losers. I've never heard of anything like that, but I want to see the stop out dance.
Okay. Spencer, I just, could you pull this up here, and then it will take a few minutes, but I was just cracking up. I even showed Lisa this one. I don't like to bore her with market stuff too much, but this is something that is worth noting here.
Dennis,
Spencer,
I'm trying to pull it up right now. Dennis, I wanted to ask you though, do you get mad when you feel like you did everything right and it didn't go your way, or you get mad when you screwed it up?
Usually when I screwed it up, because if I do everything right and it doesn't work out, I feel like, okay, well, I still played it right. Maybe I stopped out at the right time, but it's usually when I'm like, okay, yeah, I have a stop here, but sometimes you're like, I'm using mental stops. I'm like, oh, I think it's going to come back, and then it gets worse, and then it's like, well, what am I doing? I'm breaking my rules. I get mad at myself when I break my rules, and my rules are, I'm disciplined, and typically as a day trader, I like to be instantly rewarded. On most of my trades, I want to make money immediately. I mean, on something like Abercrombie and Fitch, when I'm holding that through earnings, that's a crapshoot. So a little bit, like I think I had an edge, and like I said, I thought it was going to be a heads I win, tails I win. But if it would have missed, I would have been doing everything in my power to get out of it. But I wouldn't have been mad about that, because I had a reason for going in. And my reason was they responded well to disappointing guess earnings. And that's why I thought that they were going to respond well to Abercrombie Fitch regardless of the earnings. So that's why I bought the stock long, and that's why I got rewarded here today for that. But if, I'm just doing like stuff and from random and like breaking rules, and this thing is snowballs sometimes. As traders, that. It kind of snowballs on you a little bit sometimes, where you're having a bad day and then you go, well, I got to get that money back. So you try something and then you're like, oh, what am I doing? The revenge trade, Joel calls it, a lot of times where you're coming back in trying to get your money back, and then you're doing dumb things. So, and then you get all of a sudden, now you're flustered. Now you're not thinking straight. Now you're not following your systems. Now you're not following your rules, and it kind of gets you. So it's all about, when I'm systematic, that's when I'm at my best. When I'm, now I'm all of a sudden, not feeling it, I'm in a slump, then, getting that positive framework back is difficult to do. So maybe this video will help us.
All right, I'm going to try to play this. I'm not sure if you guys can hear that, because no.
Is there a video of it to see it?
Yeah, so I put the YouTube video, I put the link to the YouTube video in both chat rooms for people to watch it. I don't think the audio will come through through my computer to the sound.
We'll have to figure that out. You know what? We'll let Jeremy do it live from Nashville. We'll have him do his like Saturday live. Can we have him do it Friday live next Friday?
Sure, we can have
from Nashville.
We can have him.
His happy dance and his, what does he call it? His stop out dance.
Yeah. Stop.
Wait, how come I get
his ears must be ringing, man?
You guys hear it
for 10 minutes?
What?
Do you hear it through my computer or not?
No, Joel. No.
Okay.
Yes.
Yeah, okay. All right. It is 8:58 here. Dennis, did you even give any? So many different tangents today. Let's try and get back to the market here.
You know what? There's some big
balances or
there's some
strategies for today's session.
Joel's not even listening. There's some big ones here. AT&T 437,000 to sell. Verizon 134,000 to sell. Both of those, well, Verizon turned a little bit yesterday, got ugly, sold off with the overall market. GE, the eternal sell and balance, that is there. 810,000 to sell here on the open on GE. It's trading down 9 cents because of that. The candle was okay yesterday in GE though. So you know what? I'm looking at this and saying, hey, I could set up 737 low yesterday, 737 day before a low, double bottom in place, things pulling back here this morning. I'd be interested in a swing trade long in GE, stopping out at 735. Maybe I'd go to the low of the move, 726. But if you're in it, I wouldn't stay too long in this one, though, because these moves in GE tend to only last a day or two. I still hate the stock long term, but I think there's a short term trade maybe up to 8 here. So I think there's 34 cents on the bone here if you're buying at 766 here this morning.
Wait, okay, hold on a second. I want to try something. I think I got Jeremy's video to play. Hold on 1 second. Can I get it to work? I think I can. Can you guys hear that? No? Damn it. Okay, never mind. Sorry. Thanks for
Good try.
No, Dennis. Joel, any last words at 9 o'clock?
Can you hear me? Am I back?
Yeah, I hear you.
Okay. Mid-range on the session is right here, right now, and we are just dancing above it and below it. So I like to see us hold 27.35.5 here for a couple brackets. Go up and test the close at 27.42. Folks, don't get super bullish until we take out 27.50. You have your 7 and 8 day highs at 27.48, 27.48.75. So that's a major resistance. On the downside, if we get into the lower 27.20 handle, I'd be more comfortable trying to buy a dip on that. So we'll see if we can take out the close and get over 27.50.
All right. Looking ahead to tomorrow's show, we are going to be joined by Greg Weldon from Weldon Financial. He'll join us at 8:35. And before we leave you off today, I want to remind you that today's show is sponsored by Wealth Venue. They are the autopilot investment platform for everyone. Wealth Venue will structure, trade, and rebalance your portfolio so you don't have to worry about making the right investment decisions. To learn more, go to wealthvenue.com or click on the link that I'm posting in the chat. Please remember again that all the information and content from our show is for informational purposes only and not meant to be investing advice. Thanks to Marc Chaikin for joining us today. Thanks to all of you in both of our chats. This is our chat on youtube.com/BenzingaTV. That chat is active when the show is on. And then our chat that's always active, premarket.benzinga.com. That chat is going all day and sometimes into the night as well, the after hours session. So, and before the show starts, even at like 4 or 5 a.m., there's people in there. So check that out, premarket.benzinga.com. Those are our two chats. Don't forget about our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play, or just rewatch us on YouTube if you missed today's show. With that said, everyone, have a good rest of the day, and we'll see you on Friday.